The 100 minus your age rule suggests that your stock allocation should be 100 minus your age, shifting from stocks to bonds as you age. Ages 20-30, 80 to 90% stocks for aggressive growth, including US and international stocks, tech shares, and index funds. Ages 30 to 40, allocate 70 to 80% in stocks to continue growth while adding stability with 20 to 30% in bonds. For ages 40 to 50, consider a balanced approach with 60 to 70% in stocks and 30 to 40% in bonds to moderate growth. Ages 50 to 60, shift to 50-60% stocks and protect capital with 40 to 50% in bonds as retirement nears. For ages 60 plus, focus on capital preservation with 30 to 50% in stocks and 50 to 70% in low-risk assets like bonds and cash. Remember to consider your risk tolerance, retirement goals, inflation protection, and market conditions when allocating investments. Thanks for watching. Don't forget to like, share, and subscribe for more tips.